Oracle got crushed after earnings, and whenever a stock this big gets hit this hard, I think it's worth stopping and asking a very simple question. Is this an opportunity, or is the market warning us about something? And the interesting thing here is with Oracle is this was not a simple bad earnings report situation. Revenue is up, cloud revenue is up, the OCI revenue, Oracle Cloud Infrastructure, was very strong. The backlog is massive. So at first glance, you might look at this and say, why did this stock get hit so hard? But when you look at it a little bit deeper, the market reaction starts to make a little bit more sense because the issue is not whether Oracle is growing. The issue is whether Oracle is spending too much, too fast, and to chase the AI cloud opportunity. So in this video, I want to break down the way I look, or the way I would actually look at this as an investor. We're going to look at the financial overview, why the stock fell, the bull case, the bear case, and then when I'm personally watching before deciding whether Oracle is a buy or not, the smarter position or something that I should wait on. And just to be clear, this is not financial advice. This is my research process and how I think through the opportunity and the risk. Just a quick reminder before we begin, this video is for educational and informational purposes only. This is not financial advice. Anytime you're dealing with investing or options, make sure you do your own research and make your own decisions. This is what makes Oracle interesting to me. When I look at the company, this type of financial overview is what I start with. I want to know, is the revenue growing? Is the important part of the business growing? Is the company becoming more relevant or less relevant? Is the growth tied to a real trend? And with Oracle, the answer to a lot of these questions is yes. Q4 revenue came in about 19.2 billion, which is actually up 21%. Cloud revenue 9.9 billion, up 47%. Oracle Cloud Infrastructure revenue 5.8 billion, up 93%. That's the huge number. In the full fiscal year revenue, 67.4 billion is up 17%. Cloud revenue was 34 billion, up 39%. So this is not a company where like the core numbers look like anything that's falling apart. In fact, the cloud side of the business looks very strong. Now, the big number that really jumps off the page is the RPO, the remaining performance obligations. Oracle ended up the quarter with about 638 billion in RPO. That's basically contracted backlog, business that is expected to turn into revenue over time. That number is enormous. So when I look at this card, I see a company with real demand, real cloud growth, real AI infrastructure story. But then we get to the red flag. Free cash flow for fiscal 2026 was negative 23.7 billion. Now, that is a number that the market is focused on. So this is the contradiction. The growth is very strong, the demand looks real, but the spending is just absolutely massive. And that's where the investors are struggling with this. Now, for me personally, I don't mind a company spending aggressively if the spending is accretive. In other words, if Oracle is spending this money to build infrastructure that's going to generate years of future revenue and cash flow and that it would make sense. But the burden of the proof is now higher. The market is basically saying, okay, Oracle, you have the demand. Now prove that this spending turns into durable cash flow. This slide tells the whole video in one picture. On the left side, you have what looked strong. Q4 revenue up 21%, cloud revenue up 47%, OCI revenue up 93%, RPO 638 billion. And Oracle confirmed 90 billion was going to be for 2027 revenue guidance. Those are not weak numbers. This is why I don't think this is simple. Oracle, this isn't like a broken Oracle situation. But on the right side, you can see exactly what spooked investors. Fiscal 2026, free cash flow is negative 23.7 billion. Oracle raised 43 billion in debt and 5 billion in equity financing for 2026. So for 2027, Oracle is expected to raise around 40 billion through a combination of debt and equity financing. That includes the previous announced 20 billion at the market equity issuance. So that matters because equity issuance can dilute the shareholders. Debt matters because leverage can become a problem if the return on the spending doesn't show up fast enough. So this is what makes this not a simple earnings miss. This is a capital allocation fight. The market is not just asking, did Oracle grow or didn't it? The market's asking, how much is Oracle going to spend? How much does Oracle need to borrow or issue? How much dilution could the shareholders face? And how long before this AI spending turns into real cash flow? That's the stock that got hit. That's why we're sitting on a down Oracle right now. This is the part where I think investors have to be careful. A lot of people will look at the big red candle and automatically say, oh, this is a buying opportunity. Other people might see this as negative cash flow and immediately say, this is way too risky. I think the answer is somewhere in the middle. Oracle may be making the right move, but the market is demanding proof. All right, so now look at the bull case because there is a real bull case here. The first piece is the OCI growth. Oracle Cloud Infrastructure revenue reached 5.8 billion in Q4, which is up 93%. That tells us demand is not theoretical. This is not just a company talking about AI. Oracle is actually seeing huge growth in the cloud infrastructure business. The second piece is the total cloud revenue. Cloud revenue is up 9.9 billion or 47%. That means that Oracle is no longer just a legacy database story. The cloud business is becoming a major part of the company. This third piece is the backlog. Remaining performance obligations reached 638 billion. That's a massive number, and it tells us that Oracle has a huge amount of future demand already contracted. The fourth point is that customer support for the capital buildout. Oracle said large AI contracts now include about 75 billion in prepaid or customer supplied hardware portions. That matters because it can reduce the amount of capital Oracle is going to need to raise on its own. The fifth bullet point is the $90 billion 2027 revenue guidance. This is aggressive, and if Oracle hits these numbers while improving cash flow over time, this sell-off may end up looking like a real opportunity. The sixth point is the bigger narrative. Oracle is no longer just a database company. The company is now trying to position itself as a serious AI cloud infrastructure player. So, if this works, the market may eventually re-rate the company differently. So, this is why I'm interested. I don't think Oracle's management is throwing money around blindly. This is a serious company with experienced management, and they clearly believe that the AI cloud opportunity is big enough to justify the spending. Now, believing management is not the same as blindly buying the stock. I don't think management deserves some credit here. I mean, I do think management actually deserves credit, but they are seeing the demand and signaling contracts. They're building capacity. The question is whether they can execute without hurting shareholders along the way. So the bear case summary, if OCI growth stays strong and the backlog converts into revenue and free cash flow, this sell-off could end up being a better entry point for all of us. Okay, now the bear case is just as important. I'm a permabull usually, but you got to give both sides of the story before you invest money. And honestly, this is the part that keeps me from looking at Oracle and saying, okay, this is an automatic buy. First issue is free cash flow. In 2026, free cash flow was negative 23.7 billion. This is not a small number. When a company is investing aggressively, negative free cash flow can be acceptable for a while if the investment pays off, but it still matters. The second issue is financing. Oracle raised 43 billion in debt and 5 billion in equity financing through fiscal 2026. Okay, that tells me that the capital, this is in capital AI infrastructure build out, and it's very high. The third issue is more financing is actually expected. Oracle expects around 40 billion more in fiscal 2027 through a combination of debt and equity financing. All right, this is a major reason why markets reacted so hard. The fourth issue is, of course, dilution. The financing plan includes a previously announced 20 billion at the market equity issuance. That matters because if a company issues more shares, existing shareholders can be diluted. Now, dilution does not automatically mean it's bad if the money invested well creates enough value, but the investors have to pay attention to it. So the fifth issue is execution. Oracle has a huge backlog, but a backlog still needs to turn into profitable revenue and eventually cash flow. The sixth issue is the main investor concern. Oracle may be building the right business, but very expensively. That's the bear case. So this is where I want to be honest with myself. I look at the AI infrastructure, the story, I like the cloud growth. I like the idea that Oracle may be underestimated, but I can't ignore a negative free cash flow, debt, equity assurance, the risk that the market may not reward the company until the cash flow picture improves. So for me, this is not close your eyes and buy situation. This is like, this is interesting, but I need a plan. I need the situation. So strong growth alone may not be enough if you're burning through cash, you're diluting shareholders, and return on capital concerns keep rising. So just there's your bear case. So what I'm watching before buying or adding to Oracle is the practical Oracle checklist, let's call it. Number one, OCI growth rate. Oracle Cloud Infrastructure growth has been extremely strong, and I want to see whether that growth continues or starts to slow. The number two is RPO conversion. Look, the backlog is great, but backlog needs to turn into real revenue and cash flow, right? I mean, execution. That massive RPO number is impressive, but the key question is how much of it converts? How fast does it convert? And at what margins look like when it does convert? Number three, free cash flow trend. This is probably the biggest one. Negative free cash flow does not automatically mean the company's in trouble, especially if it's spending accretively. But eventually, I want to see this trend improve. I want to see if Oracle can keep spending aggressively, but free cash flow never starts moving in the right direction. That becomes a problem. Number four, debt and equity financing. That's just a problem. I want to watch how much debt they take on and how much equity they issue. Too much dilution or too much leverage on a pressure, it is going to pressure shareholders. Well, number five, so operating margins. OCI cannot just grow fast. It needs to scale efficiently. If the cloud infrastructure business grows but margins get crushed, then the market may not continue. The market's going to continue to punish this stock. So number 6 is the quality of large AI contracts. So big wins are great, but they need to be durable and they need to be profitable. I want to know whether these contracts are truly high quality, long term business, or Oracle is taking on too much cost to win them. Number 7 is the stock price stabilization. This one's more tactical. A better entry often comes after a market digests the sell off. I don't need to catch the exact bottom. In fact, you never try anyways because you're going to lose every time. But I would rather see the stock stabilize from support. Give me a little bit of a more disciplined entry. So my practical stance right now is Oracle is interesting, but I would not chase it blindly. You could trade it here and there, but for me, this is either a disciplined starter position idea or a watch list name where I wait for proof. So if I decide to start a position, I want to size it correctly because the risk it's real. And if I wait, I want to see more evidence that that AI cloud build out is becoming accretive, meaning, benefit me as a shareholder. So the question is not whether Oracle is part of AI. It certainly is. The question is whether Oracle can turn AI demand into durable, profitable, shareholder friendly cash flow. So here's my final takeaway. Oracle may be a real AI cloud winner, but the market wants proof. This company does not look broken. Cloud growth is strong. OCI growth is very strong. Backlog is absolutely massive. And the AI infrastructure opportunity is real. But Oracle is not risk free here. Cash burn is real. Financing needs are real. Dilution concerns are real. And the company still has to prove that this enormous AI cloud build out will generate some kind of durable cash flow. So to me, the question is not whether Oracle is part of AI. Yes, it is clearly part of AI. The question is whether the pullback is an opportunity or a warning sign. And honestly, it may be both. It may be an opportunity for patient investors who believe Oracle spending is accretive and that management can execute. That market wants proof. For me, I'm watching key cash flow, OCI execution, backlog conversion, financing, and capital discipline. That's where we'll decide whether Oracle becomes stronger long-term AI infrastructure investment or, whether this is a spending cycle that is going to keep pressure on the stock. If you found this helpful, please like the video, subscribe, turn on notifications for more practical income investing research. And as always, this is educational only. This is not financial advice. Do your own due diligence before buying or selling any stock. Be smart. Thanks for watching.